Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 19th of April, 2023. This is episode number 2452. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, really, it's nice to see something different, and that is the equity indices are on sale this morning. We have a mild risk-off sentiment. A lot of it is is my mic okay, or does it sound good? We aim for higher standards. Um, So overall, we had several earnings yesterday. Pre-market today, we had Elevance Health, Morgan Stanley, Abbott Labs, Travelers, U.S. Bancorp, ASML, Baker Hughes, Synchrony, and so on and so on and so forth. After the close today, we have Tesla, IBM, Steel Dynamics, Kinder Morgan, and Lam Research, Discover Financial, and Alcoa. One of the key pieces this morning is that Great Britain had its inflation rate year on year. It came in pretty hot. The prior's 10.4%. The expectation for this was 9.8, so we expected it sub 10%. It came in at 10.1%. That's one item that's kind of pushing. PPI also came out at 8.5%, in line with 8.6. The core PPI output came in at 0.3 versus 0.2, and so on. And overall, it just not that great out of Great Britain. The other piece is Canada reported its PPI numbers. Canada PPI year on year is negative 1.8%, was expected to be negative 2.1%, so it actually was a little bit weaker, but the prior is 1.4, and so we're continuing to see kind of a curb in inflation across major economies. Today, other than that, there was a warning that was issued by CDW, which is a pretty large tech retailer here in the U.S., and they warned that sales are likely to be soft going forward. Seeing when the warning came out and when stocks responded, it appears to have impacted the Nasdaq a fair amount as part of this sell-off. But again, CDW is not really a huge player. It's not like Best Buy or anything like that, but still, it gives us an indication of what is happening in that sector in real time. So that's that. Earnings focus, including several U.S. regional banks. UK inflation higher than expected. Bank of Japan is reportedly wary of tweaking yield control in April. ECB's Munch. If QT is too fast, quantitative tightening is too fast, could be faced by some technical restraints that could impact spreads. Next decision will be between 25 and 50 basis points. The world's expecting the ECB, BOE, and FOMC to hike another 25 basis points. Tesla cuts U.S. prices for the sixth time this year ahead of Q1 results. And then also Fox News settled the lawsuit by Dominion Voting. Dominion was going for $1.5 billion, and trial was supposed to start yesterday. Trial was delayed in favor of a settlement, and Fox is paying up $787.5 million. They're kind of mixing free speech with actual damage to the company's earnings. So pretty expensive lesson there. Netflix pushes back U.S. password sharing crackdown. Google to launch its first foldable phone in June. Price upwards of $1,700. How many of you are going to pay $1,700 for a phone? I know Apple was charging 1,500, I think it was, for the Pro Max, a 14 Pro Max or something. It just seems like an incredible amount of money to have in your pocket, in the form of a device that can get lost or broken or whatever. And then you still have to buy insurance for it. Anyway, I digress. We get the EIA numbers today at 10:30. Crude oil stocks and gasoline stocks. Crude oil stocks expected at a draw of 1.088 million. Gasoline stocks are supposed to see a draw, are expected to see a draw of 1.267 million. So crude is falling off though pre-market. And so no, it's not billion, it's million. The original lawsuit was 1.5 billion. So 787 billion is close to the military budget for the year. Yeah, so crude today, we'll look at crude for a minute. Everything else, ECB speakers, BOE speaker. We get Fed's beige book at 2. And then we get a couple of Fed speakers in the evening. We finish off with balance of trade. Let's look at the S&P. The S&P is a multi-distribution profile. We'll look at that in a minute. Volume is okay. Seems overall volume has fallen and is remaining steady. On the downside, 175,000 versus 280,000 mode gives you an idea of how things have kind of thinned out a little bit. The inventory is 100% short, meaning the volume traded in the entire overnight session was below yesterday's close. The range is 28 points, which is okay. There's definitely some opportunity here, and the high is definitely much lower than yesterday, which was 41.98 and a quarter. The high today is 41.78. We're accepting 41.57 as the point of control. Currently in the low is 41.50. 41.50.50, right against the 41.50 mid-century figure. A quick review of yesterday. Let's take a look here. This is what was expected yesterday. Yesterday there was a goof up. Found an issue with the broadcasting software in that it had multiple inputs, microphone inputs, and even though I mute the mic, when the inputs duplicated, it continues to broadcast. So there's some stuff that I had to take down the original and post an edited version. Apologize for that. That's just stuff I didn't know. But yesterday the expectation is, look, if the expectation is we would probably be responsive selling on the open, and if we manage to get into responsive selling and then go back to the open and push higher than 42.04 is very much expected, and then from there 42.20. Otherwise I'm looking for a gap to settle trade, and that's what's shown here. You're seeing the gap to settle being highlighted here, and that's basically what happened plus some. Here's what the actual market did yesterday. There it is. Let's look at just yesterday. Open at again, it's the Russell. It's amazing how these products all look the same. Short term. There we opened at come on, 41.93.5. We ended up pushing down immediately. The full session VWAP early test held. It went to the other side, gave us an open auction out of range at that point with very clear highs and lows. And then once it broke through, then we're just looking at the short side. We had an extension of our basically an extension of the rotation down, and gave us a very, very quick test of the full session mid right there for a short. But honestly, that went too quickly to catch. But this the fact that it crossed the open and wasn't able to push to the overnight high, and it came all the way through to the other side. Although I don't trade breakouts, this would have been a decent breakout trade, but then every trade in the past looks so easy, right? But really short side only, and looking for the gap to settle back into, what was the gap to settle? 76.75. So down here, oh, hit it right there. This is it, 76.75. Boom, hits it, pulls back to the zipper. Looked to get short here. It was too, did not push high enough. And then we continued lower, broke the IB low. And then from here, it really was just a chop fest for the rest of the afternoon. It didn't do much of anything. And we ended up with a point of control of 41.7950 and a settlement price of 41.80, a mid of 41.7975. So mid settle, and the point of control all in the same place. This day is balanced. Really, the day is balanced, and so this is how things kind of played out in the overnight session. We reopen. We really don't make any attempt to push the settlement at all before we start selling off immediately. And all we've done is sell off, and as I posted in the conversion chat room, I'm expecting this to push lower, and it did. It extended the low that it put in earlier in the session here at 53 down to 50.50, and we have a little bit of separation between the price and VWAP, but VWAP's catching up very quickly. So the thing to look at this morning is, how do we treat the prior low and the mid of the session? So the line in the sand for me is going to be this 64.65 area, 64.65. That's going to be the first kind of, hey, do we stay below here? If we stay below here, if we, for example, test and fall off, we're looking short. We're starting to work our way through to 41.21 below. 41.21 below. If we look a little bit more closely at what it's done overnight on the relative delta, even though on this scale it looks like pretty huge delta to the downside, it really is not. The net delta is negative 3,800 using MBO data, but and all sides are pointing to the short side. This is why I'm expecting to sell any push back into the 64.65 area, potentially even 62. I'm looking for this thing to explore lower, but the key problem here with this is that we really tested the mid-century figure. There was like an option wall there at 41.50 yesterday. It's a big, we pay attention to the century figure, the mid-century figure, and there was a lot going on down there yesterday, and I'm not sure if there's still interest down there. We stopped 2 ticks ahead, so I'm very interested in the overnight stat to retest the 41.50, but I'm going to tell you that I'm not going to be aggressive short into that 41.50. I need it to break through, and I need a weak retest from below to reinitiate a short for the continuation of 41.31, 41.21 below. Here's the big picture. Big picture, right away we see one time framing up, higher lows, higher lows. Don't care about higher highs, only interested in higher lows for one time framing up. And then this morning, what we've done is we've broken this. So we've been in this trend here for the last 5 sessions, and we've broken below it. So there's a little bit of a fair amount of resistance from above. Again, the 64.65, and then we're looking at the 70.71 area above there, and I'm expecting that we're likely to kind of encounter resistance on the way up. This thing is looking to put in a rounded top and roll over a little bit. And again, 31, this 30-31 area is the area I'm interested in initially. If not, then 21 down here would be next. We're currently at 41.58, expecting it to go to about 41.70 potentially, 65.70. So that gives us about 40 points of range, and that's about as much as we get these days, if that. So that's how that's showing up. The TPO detailed chart. Look at this composite. I put this composite together with you here on Monday, consolidating all this action. And if you look at the composite point of control is 41.50, basically 41.49.50, 41.50. So all we did, yesterday we pushed to the value high of this composite, to the value high of the prior session. I meant to highlight that, but I did not. There it is right here. That's the value high, the edge of the blue. So pulled yesterday, it opened in a gap, open auction, dropped into the range, and then managed to push to value high before the bounce. Once it squeezes through value high, then we expect the point of control. If you can't hold the point of control, look for value low on a balanced day. Yesterday it held the value high, and coincidentally, and this is coincidence only, it held the value high of this micro composite as well, and today it's getting into the range, and it got into the point of control. And what we end up with here this morning is this blunt kind of profile here. This is your friendly pig, with a snout here. Let's give it a nice little snout. This is your friendly pig here that we're trading against, and so we end up with a very blocky zone all the way down to 41.21. So given that the snout of this profile is so blunt, it's anyone's guess how far it'll go down. So it starts right at 41.50 and it goes all the way through to 41.21. If it clears that, if it clears below 41.21, then 4100 is in jeopardy. And 4100 has been tested and retested and tested and retested, and has been key support last week. 3 tests on 4100 held last week before the rally. But once we give up the 41.21, then the 4100 becomes very much available. Okay, so that's what we're looking at here. Looking at the Nasdaq, Yen Q, still weaker. The ES managed to take out that prior high. The Nasdaq has not. And we have just a tremendous amount of balance in here. So the Nasdaq, if we move over and we look at the composite of the Nasdaq, you can see that there's just a lot going on down here with 13,080, which I've talked about. Again, this is like the 4th session in a row. I'm going to write this number up here. 13,080 holding the other day, and then yesterday opens in a gap up, tries higher, basically an open auction, falls back into the range, breaks through the value high, and kind of sits and builds on top of the upper end of the prior range. And then today it's all the way down at 13,080, and so the next key area to watch out for would be the value low of this composite is where I would be looking. So 13,000 below in the NQ, that becomes the key target. And for the NQ, 13,000 from 13,080 is nothing. I believe that's about a rotation and a half or 2 rotations to get down into that area. So the Nasdaq appears to be breaking its most recent one-time framing up as well. One-time framing up, although weaker than the ES. We're opening below this very sharp balance from yesterday. Is quite a bit of resistance above. So Nasdaq, I'm leaning short, but the market has to tell me That's the truth. I can't just kind of impose that on the markets. Looking at crude, crude is doing something very interesting. Crude is actually breaching the gap. Look at this. So we've had lows down into 79.51. We've got a double bottom at 79.51 right here. And crude has traded down into 79 in the overnight session. And since the open this morning, it has traded down into 79.47, 48, something like that. 47, I think. So crude is starting to move into this gap zone. Very important to note. Crude inventories today. This is a very clear sign that we built a box on news. We went ahead and broke that box and built a higher box and then fell back into the original box, back into 80.50. Yesterday we opened at 80.50, tested the low volume node or the edge of this upper box right there, and now we're below. This is bearish to me, short-term bearish. To me, this looks like a run back to, what's the number? 77.00. A reminder that you should be trading CLM3. We rolled to June yesterday. There's no premium adjustment between May and June, but you should be trading CLM3 in crude, and you should be looking for the 77 on continuation lower. Crude has some pretty good structure to it this morning as it breaks below. See that? Very nice. Russell. So we don't talk about the Russell much, but I want to cover it because I think it's just coiling like crazy. Look at the Russell. This thing has been stuck, excuse me, has been stuck in a range between 1720-ish to 1820-ish. So it's been trading right here, 1820 all the way across. Yesterday the high is 23, so basically 1820 all the way down to about here. This is what the Russell has been in, and it's kind of bounced its head against this high quite a bit. And then this morning it's holding up actually better than the other indices in that it's opening most likely in range of yesterday, but it has just a tremendous, while everything else was trending up, remember, one time framing up in the S&P and the Nasdaq, this thing has just been in complete balance. Just keep an eye on it. Balance is likely to lead to imbalance, and it's likely to break from here. That's all I'll leave you with this morning. As I said, what are we looking for this morning? This morning, looking for an open, responsive buying into that VWAP, which is at 62, and then we're looking for the 64-65 area to be resistance. Responsive. If it's responsive, as soon as it sells off on the pullback, looking to get short, aim for the 50. Be careful at the 50. That pushes into the overnight low stat, giving us the overnight stat. That becomes the key target. And then if it gives that up, then we're looking for 31, the point of control here for the short-term composite. And if it cannot hold that, then we're looking for 21 below that, 31, 21. So we're looking to be short around 60, 61 into 50, 31, 21. That's the key. That's the primary scenario. If it opens, tests down into the 50, into the 50, breaks the 50, then squeezes above, higher low, then at that point we're looking for a long above the 50 after the test for a squeeze into 64, 65, and then potentially into 70 up here. But 64, 65 is the key number to watch. Okay? So that's what we're looking at today. Good luck. And don't forget that tomorrow, April 20th at 1 p.m., I'll be doing a live stream to go over charting the convergent way. So we're going to step by step walk into what the whole process is of looking at the market in a bigger picture and then distilling that down into those scenarios. Good luck.